We are in Indiana talking with Dan. Dan, you're with Allworth's Money Matters.
Good afternoon.
Hi, Dan.
Hi. Can you hear me?
Yes, sir. How can we help?
Okay. Well, in the 2024 presidential election, inflation was a major issue, and President-elect Trump made a central campaign promise to place tariffs on virtually all goods coming into the U.S. And I'm a historian by background, and if you look at our history, tariffs have not done well. I could cite so many issues, but I'm sure your listeners are not interested in specifics on that.
Are you referring to the Smoot-Hawley Act?
That's one of them. That was maybe the most disastrous of 1930.
There's no question.
Deepened the Depression, certainly.
There is no question.
But, so I guess my question for you, both of you, is what should I be speaking to my financial advisor about adjusting before the 20th of January on my brokerage, and maybe getting more conservative, putting more money into I don't know, health care or something that might be not as volatile in the foreseeable future. I'm just I guess I'm what Agnew used to call a nervous Nelly.
How old are you, Dan?
Well, I'm 77. I'm retired, and I live in Bloomington, Indiana. I retired from CalSTRS in 2010. I was an academician and an academic, so I at a community college.
Got it. And what percentage of your portfolio is in equities versus fixed income or other assets right now?
About 40%
is in equities.
Yeah.
And are you married or single?
I'm single.
And you're receiving a CalSTRS pension.
Yes.
Are you spending any of the money in your investable assets? Are you living strictly on your pension?
That's interesting. I had a Prudential Series B retirement account, and I've been told by both my advisors in California, and then when I moved to Indiana, that's golden. They can't even get those anymore. But because of the extremely high rates on real estate and other things, that they shifted me or recommended that I move to a different product.
Okay.
So I actually get money in addition to my pension every month.
Got it.
From that.
All right.
I no longer have that asset, but it's now considered something else.
So let's talk about what drives prices of assets, right? It's essentially the collective wisdom or foolishness of all investors, right? So, every day the market's up, the market's down. It's really based upon when there's some new information that comes to light, how's that going to impact what our future outlook is, and do we need to adjust the outlook? People become more bullish, they become more bearish, based upon, really, a lot of it's based upon feelings, and then people build models based upon what they think people's feelings are going to be. Essentially, over a shorter term period of time, so much of the market prices are based upon what people's perception of the future is going to be. So the question is, like, on January 20th, is anyone's perception of the future going to be any different than today?
Yeah, I realize I'm probably, in my case, I'm probably projecting or maybe ruminating a little too much. But on that day, it may not shift. I'm one of those semper paratus people. I want to be ready.
And you're not overweighted in equities to begin with. Right? You're not 80% equities. I think and I'm not a big fan of tariffs either, but For someone, regardless of their age, should have a portfolio designed to weather whatever storms come. And they're always short term, at least if you believe that this country is going to continue on. They're always short term. We've had some experts on this program talk about just what's happened over historical times on who's in the White House, who's in the Congress, and essentially over a long period of time, it doesn't make any bit of difference.
There's no statistical difference.
We will have a pullback in the markets. There will be a 20%, 25% pullback in the markets in the future. I don't know if it's in the next 6 months or 6 years. I'd make I would make a bet to somebody that in the next 6 years, we will have a 25% pullback in the market.
I'd be surprised if we didn't.
Historically, we have a 20% correction every 3.5 years. If you go back 100 years, 20% pullback every 3.5 years.
It would bother me if we didn't have a 20% pullback in the next.
I'm a little bothered by how much the market's been going up the last 2 years.
And the reason that's good is because it reminds people that there's risk in the market. And the longer it goes without a correction in the market, the crazier the markets have a tendency to get because there's no reminder. It's like people build their house on an earthquake fault and they go, well, there hasn't been an earthquake here in 20 years. You're like, well, okay.
Yeah.
Right?
Yeah,
good for you.
Yeah.
Right? But we could point to why we think it's going to happen. We don't know. And we don't even know if this tariff thing, quite frankly, is true or not. Look, if you want to get... I'm going to go to a dangerous place here. Trump uses a lot of bluster.
No.
You got to remember his background. He's a New York real estate guy where you come in strong and then you negotiate the deal after, right? That's
right.
My friend, my friend who's a contractor, he told me how he walked out of a meeting last week, stood up, walked out, stormed out, and he got a phone call the next day. Okay, we'll do the price or whatever. Right? Like that kind of negotiation.
Yeah, that's the background he comes from, which is, there's no way I'm going to do this, blah, 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 blah. But he's a pragmatist at the end of the day as well. So we could look to political reasons, right?
Right.
There's always 100 reasons why you should get out of the market.
Yes.
I mean, we can list them now. They're all the turmoil that's going on. There's lots of reasons to get out. And if you have anything that are tied up in equities, it should be money that you're not going to touch for 5+ years. 5+ years. So it's longer term. And if you plan on spending it, like I'm going to need a new car or whatever, you should not have those dollars in the market. Because it's a guess what the market's going to be worth a year or two from now. Over a long period of time, we have a pretty high probability of the market going up because if you go back the last couple hundred years, that's how the markets work. So if you've got some concern, it might not be a bad idea to talk with your advisor and figure out exactly what you own, right? What percentage do I have in equities? Which kind of companies are they? Are they big companies? How much do I have overseas? What do I have in real estate? Like, what are those? And I think by doing that, you might actually come away feeling more comfortable. Our experience has been with people, particularly in the down, when markets are going down, they get spooked and they go, oh my gosh, it's going to go to zero. I need to get out. And then when you remind them how much money they have that's not tied up in the stock market whatsoever, they get a little more confident and comfortable and are able to withstand the down so they can profit when things go back up.
40% of your portfolio is in equities. You're fine.
Yeah.
You are absolutely fine.
I appreciate, your input. That's what I need.
Yeah.
The calming influence. But I've been involved in California was and still is a very strong labor state, and we had the American Federation. And it's like you say, people go in with outrageous on both sides, and if you react to that, you lose your mind.
And Dan, if you were my father, I would say to you, first of all, why did you have me at 15 years of age? I was going to say. And second of all, I would say, why are we talking about this? That's what I would tell my father. So you're good. You're good.
I wouldn't worry. And the markets will go down, Dan. You'll have some nasty days ahead. Just ignore it.
We've already, Musk has already said the working class needs to prepare for a short-term downturn.
All right. Well, what hasn't Musk said, though? I mean, this guy is a nonstop.
And you're absolutely right about, just not President Trump, but any campaign. There's a huge a difference between campaign rhetoric and what's going to happen.
No kidding.
So,
I mean, at the end of this last campaign, it looked like an Oprah Winfrey show where everyone got a car. No taxes on tips. None of this. Everything's free. I'm not. And we're going to give you this. We're going to give you that. It didn't matter. Whatever the audience he was talking to. Well, appreciate the call, Dan.